Hey everyone, it's Andy again, and I'm going to talk about FOMO, fear of missing out. As a new investor, everybody wants to participate in what seems to be the new trend. When they see other people making money, it's like, hey, wait, these people can't make money without me, so I got to jump in and make money with them. So when you're new, it's almost innate to human nature. You know, a sound goes off somewhere, it's like, hey, let's go check that out, or hey, they're making money, I want to make money too. They always want to jump in and participate. And being a successful investor, it's almost the opposite thing that you want to do. You want to avoid those things that people are chasing, and you want to go to where no one's buying and no one's really making any noise, and you buy it before it becomes a bubble. So we'll jump into it. So FOMO is the fear of missing out. It usually pertains to bubbles and the mentality to chase something. So the next slide this is Jerome Powell's head, I think. What he sees is a bunch of bubbles. There's bubbles everywhere. There's a bond bubble. There's a stock market bubble. I'm sure there's other bubbles out there that I'm not even aware of. And the cycle, and we can go through that here, is the smart money. They call it the stealth phase. Is the beginning of a move. This is where the smart money accumulates. They accumulate when no one else is looking at it. Nobody really cares to think about it, and they're over there buying, accumulating when everyone else is not participating. The institutional investors kind of jump in on this awareness phase, and what you see here is it's really low in the stealth phase, and it kind of comes up, and it's that first sell-off. They call it a bear trap. This is where people think it's like a little pre-bubble. They start getting short, and it traps the bears that want it to go down, the short sellers, and then it reverses and goes back up. This is kind of the first big move, and then comes the second move. This is where the public participates, is this big move at the end of a move. That's called the mania phase. So this is when it gets media attention, right between the kind of the institutional awareness phase and the mania phase. This is where everyone's like, this time's different. There's a bunch of enthusiasm around it. Everybody, has greed at that top, and that FOMO kicks in for everybody, the fear of missing out. They see that everyone made all this money in here, and they got to jump in at that top. And then at the top, they're saying, this is different. It's a new paradigm. Things will never be the same, with this company, and they're not going to go down. And then when it goes down, you've got kind of this bull trap as it goes, coming down. Then you've got fear, capitulation, despair, and return to the mean in the blow-off phase. So, as you can see, here's the price or valuation. We want things that are coming into cycle, that are undervalued, that are low on the value here. And we want to avoid anything that's going into this public overvalued state. And we don't want to get caught up in anything at the top going up or down here, because it becomes really difficult to time. And it's great. I mean, if you buy in the stealth phase and you ride it all the way up and you start selling, somewhere in this region up here, I mean, that's exactly what we want to do. We want to be buying in this stealth and beginning of awareness phase, or even on this bottom here is a great spot to pick up, because we know that the movement and the cycle's already begun, and you can jump in here before the big move. And I'm going to go and talk about some graphs, past this one. So here's Bitcoin. Bitcoin, you've got that big move, then you've got the bear trap, and then it went vertical. And I think this one they only went to 15, but it still went vertical up all the way up to, I think, almost 20,000. But this is a chart that's kind of fitting to that bubble graph and that move. Here is Bitcoin and the NASDAQ bubble. They're overlaid, and you can tell that they're very similar in how they move throughout time. These bubbles, they're all very similar. Now here's Tesla stock. This is I think this is the Robin track. You can see it's going sideways here, the stock price. And these are the green lines, the users that are holding, I think Robinhood users, and the pink chart, or the pink line is the price. So you can see the price. This is that bear trap. Look familiar? Stealth phase, the bear trap, and then the blow off top as it goes up. I don't know where the top is on this, but I know it's a bubble, and I don't participate in bubbles. You can even see the exponential growth in users. That's crazy. It's absolutely crazy. This is something you don't chase. Don't chase this. Stay away. I recommend not going into Tesla stock. I think it's going to end bad. Here's the Tesla stock. Most recently, you can see it in just a pure price chart. It could very well go up. It could double again. I don't know, but the downside risk and the upside potential, it's too great for me. I'm going to avoid it. And here's one peculiar thing. I think Tesla just diluted their stock and sold 5 billion shares to raise money. If this company is so strong, why are they doing that? Why are they raising money, 5 billion, to fund other things? Why are they doing share dilutions? This stock should be so strong and so cash flow positive with so much profit that they don't need this if you're going to sustain a move like this. Plus the PE ratio on this thing's like just absolutely ridiculous. It's like over 1,000 based on current earnings. So they have to use forward earnings and adjust it all down. This is something I would avoid. I would not get into Tesla. Here's something, I was talking about cycles in my other videos. And there's some things that you need to realize. This is the top of the 29 crash right here. And the one thing to think of is if you're investing in stocks and it's out of cycle, look at how long it took from the 29 high. It took 25 years from 1929 to 1954 to break that high again. This money is 25 years, that's an entire working career for somebody. If you're 20 years old and you're working in the 1920s, you rode up this little peak right here for 5 years into it. And then the next 25 years, this is a 30-year total gap here. The next 25 years, you got back to even on a lot of your a lot of your contributions in the beginning of your working career. And that's a rough time period to be investing. If you're a younger person that just happened to have the wrong market timing. And this happened again too. Look at from the 68 to 1980. This is 12 years where the market went sideways. And that's rough. That's a long time to really not have too many gains. Obviously you would have cost averaged in all through here, and you probably would have had some gain at least up here. But the market overall went sideways, and you can sell between these two sideways patterns. The in cycle was in the 50s and 60s. Nice big growth phase for the S&P 500. Here's a gold chart. And remember that 68 to 1980 right here? This sideways movement? The cycle was for gold. It went from 35 to 8. I think the peak was actually 835. This is an average per something. I can't remember. But this cycle was up. So what you want to do is you want to tie this 50s cycle all the way to 68, get out of stocks when they're high, and time it with this cycle in the beginning and ride this up. And then in 1980, again, it's not in that chart. You want to ride stocks in 1980 all the way up till about 2000. And this is where you jump off of stocks as gold went sideways. Then you see this nice pattern here. It broke, and I'd be a huge buyer right here. And this is the beginning of the secular bull market right here, 2000 to 2025 or something. And if remember, I was talking about the bubble phase. Right? This is kind of the silent accumulation phase all in here. You get the institutional investors and whatnot, and then this bear trap. This is a bear trap. This is starting the mania phase. And I don't know how high this is going to go. It's going to go way up here. But this is the mania phase coming up in the gold cycle, precious metal cycle. And here's a comparison. So you've got that same chart pattern if you look here. It's starting to go up, and this is the stealth phase. This is when they went off the gold standard. And then it had a bear trap. This was like a 50% decline. This is a 50% decline. And this is a bear trap right here. Then you had that blow off top. It's a big move. And we, if you look just over this peak here, I mean, we're just above the peak here. So we're like here, somewhere in this range before this blow off gigantic top. Now here's the cycle. This is the 1970s bull market in yellow here. And orange is the 2000 bull market, and it's overlaid. I think this is probably up till 2015. Either way, we're up here probably right now in terms of percentage. We're somewhere up here. But look at how close these track, these cycles. Very, very close. And I think we're probably up here somewhere, and it's about to go. The next move is going to go pretty large, and it's going to be a very large move. And if the 2000 move matches the 1970s move, I believe the top is somewhere around $7,000 to $8,000 if it were to do it exactly. The only thing that's different with this cycle in the 2000 cycle is the 1970 cycle was mainly American-centric. It was all America. Now it's the entire world that's just blowing up their currencies and all in a ton of bubbles everywhere. Stock markets everything's a bubble. Bond markets, stock markets, they're lowering rates, trying to prop all these bubbles up, and it's worldwide. Now what happens if the entire world wants to participate in this gold bull market? The gold market and the silver market are so small in comparison to bonds and stocks. If all of this money comes running at the precious metal sector, it is going to go extremely high, far higher than what you can imagine. It's going to make Tesla look like a little blip. If this were to occur, and to me, it looks like this is setting up to make that run. Here's a chart I got. This is a guy who posts on a lot of silver forums. I wrote, got silver, FOMO at the mouth, fear of missing out. So this is kind of the silent accumulation phase. If you look at it, you kind of pull back, and here's your bull trap. Next is your blow-off phase. And here he's saying, we're at 14. This was back a little while ago when it was bottoming out. It's going to pop out, which we did, and we're at like $30. We're up here now, and it's moving quick. Here's 2021. This is a pretty good graph. It could do something like this if you extend this out. It could get to 900. I don't know. If if a bunch of people run into it, and then the industrial people run into it too, who knows how high this is going to go. But this is the potential of this mania phase in precious metals coming up, which I think it's a good time to get in now before the retail investors really start piling in. This is a huge chart pattern. This goes back into the 70s. This is called the cup and handle. It's a chart pattern that means it's going to go higher. And this thing is probably the biggest cup and handle that there is, and I don't even know if it's valid to make it this large. But I just wanted to make sure, to share this as I've seen this all over the place. And it did pop out, and we're up here in the, almost 30, somewhere up here. So maybe this is right, and this is projecting prices that are ungodly higher. In the multiple hundreds probably. So the patterns are there. They're showing up, and we're in that precious metals bull market phase. So these charts are all supporting it. And this is a recent chart of silver, kind of that we were seeing it from like this phase, this 14 phase is what he was showing, and it broke out. We had that huge panic sell-off, and let's just kind of avoid this sell-off. It came right back up, and now we're breaking. We're making a run for it. So yeah, silver's a great bet right now. So that's all I had. This is probably the potential FOMO market going forward. I think this is just getting going. If I'm helping you with your investments, please subscribe, hit that like button, and I really appreciate your time and your ears. Thank you.